Welcome everyone. I'm going to do a closing market wrap video just to cover really how we closed. We're going to go through some of the indices and just look at some various different stocks that I haven't looked at for a while. Before I get started, I just want to kind of point out, I get a lot of critical comment when the markets go higher, and that's okay. I have no problem with that, but just let's keep the comments constructive, right? So, if you have something to point out, that's fine. And I really don't delete really any of the comments. The only time I delete someone or block someone from the channel is if they're literally just trolling me and not really being constructive and just jumping around from comment to comment saying how I'm always wrong. And it's just not true, right? I mean, I don't get all the trades right. Nobody does. And technical analysis is not perfect. But I don't get all the trades wrong either. And a lot of the comments that I get from people that try to troll me they really just try to point out the ones that I get wrong, and then they just ignore everything that I get right. And at the end of the day, they just want to see me get things wrong, I think is the point. So those people, they don't really belong here on this channel. And anything else, if you're critical of a trade idea that I point out, that's fine. Just point out why you think it's wrong. I mean, it's completely possible that something I'm pointing out could be wrong. My trend line could be wrong. My read on the chart could be wrong. I'm open to being wrong, and and I will be wrong. So, there are times that I'm going to be wrong. There's times going to be right. So we just call it for what it is. But at the end of the day, I don't get everything wrong and I don't get everything right. All right. So we try to find more winners than losers, and then we try to manage the risk. That's the main key, right? Is managing the trade, managing your risk so that your winners make you more money than the losers lose you money. And at the end of the day, you're making money. And so that's really what we try to do. That's what I teach in my course. All right, so I want to point out the futures, NASDAQ futures, and just kind of where we're trading at right now. I've had this trend line marked out right here at 13. It's about 13,586 or 88. It's basically right here. And this is where we rallied right up to over the last few days. You can see today we're just treading water on this trend line. The last couple of days we just pretty much shot straight up to that resistance line, and we're just treading water. So this is resistance. I think it's likely we're going to get a pullback from this level. If I roll back here, I was looking at how this was behaving in the the last time it was trading here. You can see on the hourly chart we held resistance back here, held it again, and then when we broke above, it really did hold the support. You can see we held support all through here, held support here, and then we broke down. So that's where we're at right now. If you look at the daily, you'll see here as I zoom in, look at the big impulsive candles that are coming off of this trend line. So we rallied up to this support line right here. And then big impulsive sell candle right there on the daily. Finally, we broke above it. It held support. But look, when we broke back below it, big impulsive sell candle. So it's just showing that there's some big reactions, or, it's a level that the market cares about right now. And this is where we're trading at right now. So, I think it's likely we're going to get a pullback from here, from this level, and not just slice right through it. A lot of the time, people, when you have three big rally days like we've had in the NASDAQ, people lose sight of the fact that, sometimes when you rally, everybody gets bullish after the bullish move has been made. Doesn't mean that we can't continue higher, but I do see a lot of the time that everybody's extremely bullish as you rally right into resistance, when oftentimes you want to short into resistance and you want to go long on support. So that's just something, check your emotions and understand that a lot of the time, sometimes the best short entries or opportunities to sell something are when something looks the most bullish. That's oftentimes the best time to short. So I'm watching this level, all right, and I just want to just letting you guys know that that's a key level. Now we can break above it, and if we break above it and start to, maybe we gap up or trade higher overnight, then I think we're probably going to make an all-time new high, all right, and it's likely we're likely going to run up and make a new high. And it's still going to be a divergent high, though. If we make a new high anytime soon, this negative divergence, which has been intact for a while, if I just shorten it up right here, it will just be a new divergent high. So just another rally with a negative divergence, which means it's likely going to fail up in that divergent high area. Looking at the Qs, you can see as I zoom in, kind of a corresponding level is right there. It's that gap fill. It's the gap right here that we just filled. And you can see back here in January of 2021, that was resistance right there. We finally broke above and it held support right there. And then it gapped down. And we've traded right up to that gap fill area. Look at the price action today. We were kind of running up, but they sold it down and made what looks to be almost like a little reversal doji. The tail's not that long. Usually for reversals, I like to see a longer tail or wick, where, basically what that wick is trading action intraday as it was moving higher. So usually I like to see something kind of run higher and then reverse and sell off and close the day, lower or near the open. And we didn't see a whole lot of trading much higher intraday. So for the most part, if you look at the hourly, we're just trading right along that trend. Now, this is not a breakout. Yes, we're still holding above it, but usually, we've run right into resistance, which is right there at 330, and we're not breaking through it impulsively. We're just kind of chopping along above it. If there's stops being set, this is where those stops are being triggered. So we could easily gap down or sell off right here because, again, we're right at resistance. I don't necessarily see any signs that say we're going to do that right away, but it's completely possible. And it's objective. It's still objective to basically short right up here at this resistance level with a stop not too far above. All right. I think I talked about that the other day where, maybe stopping out above this candle right here up around 334, probably stop out up around 334 as a pretty tight stop, but it's objective to short here with a move down to gap fill at least 324.50 and possibly, and probably, I guess, down to 320, but as a minimum down to 324.50, I think is very likely. IWM doesn't really have the same look. The IWM is, it gapped up. It's not, there's no resistance overhead. It's at all-time highs, basically. Today, we just kind of been moving sideways since yesterday. And it's just, it's at all-time highs. So I don't see anything bearish in the S&P 500, any reason to short the S&P 500. There's no levels to short against. So it's just one of those things you just, I'm just sitting back and waiting to see what happens on this. It's at all-time highs. Sorry, and that's the SPY. I don't know if I said IWM. That's the SPY. Here's the IWM. All right, so again, we had this gap fill. Look at the hourly right here. This level, you have this little gap right here on the hourly chart. Sold off, came all the way back and bounced right into the gap. So we gap filled, and you can see they've just been kind of chopping around this level. So this is your resistance level, 225.03. We're either consolidating here and going to continue to move higher, or we're going to get rejected here. I don't know which one it's going to be, but I do know that we're at a key level. So, you could either, if you're bullish, you could wait for a break above this level and go long, or if you're bearish, you could short right here and wait for, trade this thing down on a breakdown. On the daily chart on the IWM, you had this bearish divergence right here that set in motion a move to the downside. Again, this was a drop of, from the high to the low, of about 11.5%, 11%. We've had a kickback rally, and to me, it looks like this is going to continue lower. I don't see any signal that tells me that this drop right here is just going to reverse and continue on its way, but doesn't mean it can't. We could run up and make a new all-time high. So again, a couple ways to trade it. I mean, the way I would trade this is I would short right here in anticipation that we're going to continue lower. And if we don't and we break above, I would stop out and let this thing continue to run up to probably make a new all-time high. And I would look to probably short up there with with a sell signal, but I'd look for a sell signal up there. That's how I would look to trade it. Someone asked me to take a look at Costco, so I pulled up the chart, and this is really what I've got on Costco. I've had this one marked up for a while. So Costco is in a long-term bull market going back to 2009, and here's your uptrend. You can see it's just been in a very consistent, clean uptrend, and it remains in that uptrend. So Costco's still continues to be in a long-term bull market. That has not been negated or changed. We did have bearish or negative divergence up here. I circled it. Back then I circled it, and we did get a good sized drop. From the high to the low, that's a drop of about 22% in Costco. I also have the secondary trend line, which is not as clean of a trend line as the one below, this blue one, because that's a longer term trend line. But we bounced below it, we recovered it, and it actually, you can see a reaction. We recovered it, came back down, it held support, and now it's continuing to move above it. So in general, this is bullish until I see a breakdown of this trend line right here, a sell signal, some sort of impulsive breakdown. I would just continue to look at this as a bullish chart, and that's it. Bullish until you get a breakdown of that trend line. I don't see any signal or signs that there's no sell signals, right? That's all I'm trying to say is there's no reason to short this thing, and so it continues to remain in an uptrend. Let's take a look at Roku. So Roku is, all right, here's what we got going on Roku. Here's your March 2020 lows. Nice clean uptrend. All right, you have lots of reactions on this trend line. You can see just all the reactions along the trend line. Recently, we broke that trend right here. And when we broke it, we had negative divergence. So there's your momentum dropping off. So the way it works is you'll be in an uptrend, everything will be fine. Bearish divergence will start to show up. That's not a sell signal or a reason to necessarily short, but it's an indication that the trend's likely going to reverse. And so you wait for a break of the support. Otherwise, there's no reason to short. And this continued to be in an uptrend, even with the bearish divergence building. And then you've got the breakdown right there. So that's your sell signal right there. And you can see today they popped it up, ran up 10% and did a back test of that trend line. But it's just a back test. So this is resistance. This is the objective area to short at. And I likely see lower prices, coming. So I would be, again, I think we reject here or, maybe we back test some more. But I think we're going to continue to trade under this trend line. And we're likely going to move down to next level of support, 236.50. I see as the next level of support. So I'd be looking for a move down to that. That is, again, that's a drop of about 30%, 35%, 34%. So again, this right here is the objective area to short. And yeah, that's what I see. I see a trend, a clean trend. I see a break-in trend. Now, if they recover it and they pop it above here and it can hold, then this is a false breakdown or a bear trap. But until we see that, we just don't know that's going to be the case. So all I can go off of is what I see today, and what I see is bearish divergence. I see a break of trend, and I see a back test with likely a continuation to the downside. Okay, someone asked me to look at Bitcoin. I don't trade Bitcoin, but we'll go ahead and look at it. It's a chart, just the same as all the rest. So on the daily, I have this uptrend line right here. We could probably adjust this slightly. It looks like it's just a little bit off. Right about there. Let's see if we can find some more reactions. Again, I'm looking for a trend line that has the most reactions. We're going to leave it right about there. So, we have an uptrend in Bitcoin, and that's not been negated. There continues to be an uptrend. We also have negative divergence right there on the RSI and negative divergence on the PPO. So the divergence showed up really right here. So all the price action, all of this price action has been divergent high price action, telling me that a trend change is likely around the corner, and yet we don't have a break of trendline support. So no sell signal, but it says be on the lookout for a trend reversal. So, again, I would just ride this uptrend while it continues, but, once you get a break of this trend line, then that would be your sell signal or your trigger to exit if you're long. Levels of support on Bitcoin. You've got a gap right here. I think that's a very obvious target, would be this gap. Probably right about there. And that is what, 24,970 as a gap. And the 200-day moving average is right down there too. So if you got the break soon, maybe you'd run into the 200-day. It also looks like you got a level of support right here where it reacted and held support right there several times as well. And that would be a level of 30,965. And there's also a level right here, right up in here. So that's likely going to be your first level of support. We could probably, it's somewhere right in there. We'll say that's right about 44,785. So depending on when you break, I think you're going to run down and hit that level 45,000 or so, and then potentially work your way down to these levels down here. Ultimately 25, this would probably be my final target, about 24,650. It can go lower, but we'll just mark those levels out until we see some reactions. But again, when I say it can go lower, I'm also saying it's in an uptrend. So I'm not saying short this thing or it's going to go lower today. I'm just saying that this negative divergence is telling me it's going to go lower, sometime in the near future. But, you got to wait for that breakdown or that sell signal. And until then, it's just continuing to uptrend. All right. So if you're long, I would just stay long until you get that sell signal. Or another way to do it, conservative way, is to start to lock in some profits. Take some profits and let maybe half your trade ride or 25% of your trade run. That's always an option as well. Let's take a look at McDonald's here. And I want to start out with the weekly chart here on McDonald's. I pointed this one out for a while. So McDonald's coming off the 2009 lows. You can see here we held support on the weekly chart. Let me zoom it in here. Held support through here. I can probably adjust it slightly. It can probably be adjusted, maybe even something like that. Again, it's a weekly chart, so you have to take it with a grain of salt. But we've held support through here, and look at the weeks right here. We held support right through here. We then broke, and to me, it looks like we're coming up for a back test of that broken trendline support. It's a little farther up there. We've got another 3% or so more to go, but that's an area that you might want to keep an eye on and see how this stock behaves. If you look at the daily, you can see here the daily's a little cleaner. Yeah, we had a couple whipsaws down below, so obviously, these little whipsaws are not my favorite because it just invalidates the trend line a little bit. Makes me wonder that if this trend line's accurate. But again, got some reactions right in here and some reactions right in here. And then we've got a couple reactions above where we chopped above. So again, we're coming up to that resistance. If we do it anytime soon, it's going to be a new all-time high in McDonald's and likely going to be bearish divergence. We don't have a new all-time high yet, so we need to pop above this 232.18. Basically, just a little bit higher from where we're at today. And if it does it anytime soon, you're going to have what looks to be negative divergence. And it won't be confirmed, though. So one thing you're going to want to see is a move to all-time new highs and then a rejection. Some sort of a sell signal or a rejection. So unless you get that sell signal, obviously it's not a reason to short, but it is going to tell you that you're likely going to get a rejection. So be on the lookout for it, and I'll keep my eyes open for it to see if we are going to get rejected. And if we do, then we'll look to trade McDonald's to the downside. One of the reasons why I don't want to be a bull in McDonald's and why I don't want to be long is, again, just looking at this bull market chart. I want to be a bull when I'm above trendline support. So anytime through here when I'm above support, I'd want to be a bull. Anytime all through here, I'd want to be a bull. Once you broke right there, I don't want to be a bull in McDonald's. I want to look for shorting opportunities. So obviously I'd want to short here as it collapsed into COVID. And then as it bounces back into resistance, I want to look to short into resistance again. So, and that's what it's like, it's about 3% off, 3-4% off of that resistance line. So I want to look for short opportunities up here, okay? You want to look to be a bull, down at bottoms, and you want to look to be a bear or a short up near tops. And so, yeah, again, that's what I'm looking for on McDonald's. And here's KHC. We'll go to the daily chart. This is one I've been bullish on. KHC, again, here's your March 2020 lows and your uptrend line, and we're just continuing to walk up this uptrend. The main thing for me on KHC was the breakout right here above this $36 level. That level was your gap. There's a big gap right here that was back in 2019. I think they had some accounting problems, or I don't know exactly what this gap was caused from, but you had this big gap. And this is a pretty large gap. This is a gap of a 25% drop. And it's been in a bear market, And so you can see we gapped down and just sold off. Recently, we came up and hit that level, and we were rejected there. And then just most recently, we had a breakout. See the breakout right there? 2 days of big impulsive buying. That's your breakout. You come in for a back test and hold that support, and then continue the uptrend. So at this point, it looks like we're gonna gap fill. We're at resistance, or just about at the first level of resistance at this 4207. I think that's going to prove to be some resistance. But ultimately, I think we're going to run up and gap fill all the way up here at 4790 up here. And that's been my target the entire time in this thing. And, we're about halfway there now. You can see on the, on the RSI, we do have some bearish divergence right there. On the RSI, and slightly on the PPO. So this is divergent highs, and so we're putting in negative divergence, coming into some resistance. I think again, I think it's likely we're going to get a pullback, maybe back down to this trend line, probably hold that trend line and continue to build that negative divergence as we run up and fill that gap. All right, so that would be my final target, that big gap on this one. Yep. And that's really all I got for this video. So if you guys want me to take a look at any stocks or anything, leave a comment below, and I'll try to, browse through anything that looks interesting. And if you're new or if you're confused on what I'm talking about on this channel, you don't understand the technical analysis that I'm describing, take my training course, my technical analysis course. Link is in the description below. And it's a good course. It's about 5 or 6 hours of training. And I'll go through all the concepts that I cover in these daily videos. That's all I got for everyone. Thanks. I'll catch you guys on the next one.